Is with us, President at Yardeni Research. Ed, good morning. Great to have you with us here on the program. I mean, the market rallies on, carries on, and Nasdaq Composite at a new high. What's the latest? I mean, what's the talk? You know, I was reading somewhere that many are starting to compare what's happening in the US to, the Google searches for the word bubble are rising once again. I mean, they're just rising. It's not exploded. And people are comparing this to all sorts of what we saw in 2021, back in 2000.
Yeah, absolutely.
Just your thoughts.
Well, I agree that a lot of people suddenly are talking about a bubble in the stock market, which is quite a change. Remember, only the past couple of years, people were thinking we're in a bear market and that we're going to have a recession. I think ever since November 30th, 2022, the market has had some reason for excitement, for rational exuberance, and that's the AI phenomenon. It was on that day that OpenAI introduced its ChatGPT, and we haven't really looked back since then. Once people figured out who makes the picks and shovels for the AI gold rush, those stocks have been going straight up. So there's a certain amount of frenzy going on in the market, but even in Nvidia, its stock price has gone up, but not as fast as its the earnings expectations of analysts. So the PEs actually come down to a reasonable 35 on a forward basis. I think we may very well be in the early stages of a market melt-up. I hope not. I'm still looking for 5,400 by the end of the year. If we get there by the middle of the year, I'm going to have to reconsider.
Okay. A market melt-up, right? Early stages of a market melt-up. And that's interesting, right? Nvidia is only trading at, I'm using the word only because in the Indian context, I mean, it is only 35 times. I mean, so it's not
only
like
35. We used to think that 20 was a high multiple. Now we're looking at even higher multiples.
35 is the new 20, right? As they say.
But we have companies in our own markets that are trading well above their historic valuation. So Nvidia is not alone.
Yes.
But Ed, what does that mean for a market like India? Because momentum just continues to get stronger. Every wall of worry is being climbed. Do you think this run will continue?
Well, I don't think the run has much to do with AI. It may continue to find some support from AI if some of the companies over there start to talk about how they're going to either develop AI technologies or use AI technologies. But we all know why India has done very well. It's been a great alternative to China. And China this week, the government is going to come up with some more attempts to stimulate their economy. But it's pretty hard to stimulate an economy that's in a property depression. We know that from what happened in Japan. We know that from what happened in the US when we had our property depressions. It takes 5 to 7 years to really come out of it before the deflationary consequences ease off. Meanwhile, China's an important source of global deflation, bringing inflation down. And so people are looking around for, okay, what economies are still doing reasonably well and have good futures ahead of them? And the US obviously stands out, as does India.
Okay, all right. Hi, Ed. Good morning. So India from the emerging market basket, I think from the developed markets, the US markets is something that you have liked as well. What do you make of last week's economic data, though, that came out of the United States? Quite a barrage of data is what we had. Your reading of it and how you expect the Fed to react?
Well, I think the Fed is convincing the market that they're not going to be cutting interest rates 5 to 7 times. I never bought into that. I didn't believe that would be the case. The Fed officials have been talking about 2 to 3 times. I think that's a more reasonable outlook for this year. But I'm coming around to thinking, and others are as well, that maybe it's possible that there might not be any rate cut this year. No increases, but no rate cuts. The economy seems to be handling these interest rate levels quite well. It did it before the great financial crisis, and it's doing it again. And so the economic data that's come out, to answer your question, supports an economy that looks like it's growing about 2.5% to 3% in real GDP terms. And inflation is still moderating on a year-over-year basis. We still continue to see a declining trend in consumer prices.
All right, Ed, we'll leave it at that. Thanks a lot for joining in and giving us a quick take on what to expect from the Indian markets and, of course, the global arena.